Mark, good morning to you. So let's start with the yen and actually put it in a wider context, because obviously the other side of that yen strengthening is dollar weakness, and the dollar seems to be weakening for all kinds of reasons. Geopolitics in the Middle East, also perhaps the hangover from the Fed last week and what we heard or didn't hear from the new Fed chairman. What does that add up to in terms of the dollar from here?
Yeah, I think it was potentially pivotal week for the dollar in terms of that. Even before the intervention, as you outlined there, Anna, the Fed really kind of did not have a meeting that it kind of implied much credibility, and that undermines the dollar long term. Then when you follow that up with the US supporting intervention by Japan, and we also had intervention in Korea and Taiwan, so multilateral intervention essentially against the dollar at a time when its own central bank is undermining it, that means it could be a big turning point. Now, I'm a little bit nervous, despite being someone who's kind of structurally kind of long-term bearish the dollar. I'm not quite sure it's ready to turn yet. And I do note that the price action in dollar yen, if you're the Bank of Japan, must be very disappointing so far. I mean, dollar yen's again bounced 1% from this morning's lows. And I really think that officials need to probably get it below 155 tonight. Otherwise, I think the price action for those who are bearish dollar yen is quite worrying at the moment, given it keeps on bouncing back so rapidly.
Mark, when we look at the stocks picture, you've had a negative session in Asia compared to the rosy outlook for futures on both sides of the Atlantic this morning. The oil story feeding into the positive sentiment. But in Asia, a lot of it seems to be about concern on Chinese AI competition. How seriously should we be worried about that as a threat to other kind of tech stocks in the Asian continent?
I think the new Chinese models, while there may be only another incremental development in this story, is probably one of the most momentous things to happen in the last few days in markets. And that's despite the fact that we've had yen intervention. We've obviously got the US-Iran twists and turns. But I think, this is really changing the AI trade. Now, it's going to take some time to kind of work out, but I think it again threatens the whole hyperscaler kind of business model in terms of how they're spending. I think probably one of the people who are really sophisticated on this AI trade will kind of nail exactly which stocks will win and lose out of this. But I think at a bigger picture level, it again probably suggests that the rest of the world outperforms US stocks over the long term. That's a theme we've seen over the last 18 months. But US stocks have been making a comeback up until 2 weeks ago. They'll now underperform again because they're priced to get a disproportionate amount of the gains from the AI theme, when in fact, I think Chinese models are saying that they're going to democratize the returns. Everyone's going to benefit. Now, exactly which stock markets in Asia may be harder to take, but I think that's the bigger theme, is that the rest of the world, other countries that haven't got these hyperscalers can still benefit from the AI boom. They can still benefit from the productivity boom. I think it might be less positive for Korea, that's based purely on those kind of two big memory chip stocks, but it's good for other outcomes. And Europe's benefiting from lower oil prices as well. So I think the bigger takeaway is rest of the world to continue outperforming US stocks, as has been the theme of the last 18 months.